Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, April 30th. Mixed trade here overnight, leaning a little bit lower. Soybeans are the current leader to the downside, trading 6 to 8 lower. Meal prices are down $1 to $2, while bean oil is 15 to 20 points lower. Corn, we're steady to a penny better here in the spot May contract, while new crop is down about 2 cents. And wheat prices are little changed here, really within about a penny or two of unchanged. Deliveries against the May contracts were a bit light in beans and Chicago wheat at only 3 contracts on beans, 88 contracts on wheat, pretty much in line with expectations everywhere else, with corn at 25 contracts, 629 in the meal, 852 in bean oil, while 430 contracts against the Kansas City wheat contract. A lot of demand news here over the next couple of days. At 9:30 this morning, we'll get our weekly EIA ethanol production report. Production last week is expected to have slipped to about 301 million gallons. That would be down from 304 million last week. And if realized, it would be just below the pace needed to reach the USDA corn usage forecast of 5.5 billion bushels. Later today, we'll also get a report from the EIA, the monthly update on the biodiesel, renewable diesel capacity production and feedstock usage data. Previously released RIN data would suggest that another month of sharply lower production in the month of February as the market adjusted to the expiration of the blender's credit here at the end of 2024, while the market also still awaits clarity from the Trump administration on a biofuel policy moving forward. Tomorrow we'll get export sales along with census soybean and grain crush after the close. Soybean crush is expected to have reached about 206 million bushels. That would be up 1% year over year. Global weather largely favorable, still a little bit early, but we're off to a record planting pace in beans right now. Both corn and spring wheat plantings are above their historical averages. Drought readings are shrinking. Heavy rains overnight in north central Texas and Oklahoma, with more on the way over the next week or so. We could see some localized flooding in the southern plains, but we'll definitely see some further easing of drought conditions in this area. July corn did fall to a fresh 3-week low overnight before recovering. This is the July contract. Funds yesterday, big sellers in corn. We had them selling just over 21,000 contracts, cutting that long position now down to about 94,000. I would look for old crop to regain on the new crop here, as near-term export demand likely to remain strong. New crop being held back by a lack of a weather issue currently right now in the U.S., while growing production estimates in South America, I think, will provide added competition in the global marketplace for the 25-26 marketing year. A little bit lower here in the July beans, as it to me looks likely to challenge moving average support at 10.41 1/4. The July low overnight at 10.43 1/2. Speculative traders yesterday did sell about 8,500 contracts, reducing their long position in beans to 29,000. With Argentine bean harvest off to a very slow start, sales of this year's crop do sit at an 11-year low. Weather right now should be conducive for the next week or so. Drier conditions should enable harvest to get a good jump. Now, new contract lows here on the wheat in both Chicago and Kansas City overnight, as growing production prospects here in the U.S. will limit the upside. I've got that short position in Chicago wheat now back out to just over 100,000 contracts. However, that's still well shy of the record large at over 160,000. Speculative traders just continue to harvest that pretty big carries in the marketplace, rolling these short positions forward. Thank you for listening, everyone, and I hope you have a great day.